Ladies and gentlemen, good afternoon once again, and to all those who've just joined us, welcome to the Asian Bankers Teleconsultation session on multi-channel customer service and onboarding. My name is Arun Mambuli, and I will be your moderator for the next hour. Before we begin, let me tell you a few session rules and how the session will flow. If at any time during the session you have any questions for us speakers or panelists, please write them down on the chat screen, which you can see on your right-hand bottom corner, and send it over to me. I will pose those questions to our panelists in the last half hour of the session. Now, with regard to the flow, we will start the session with a presentation from Chen Hao. Chen Hao is a research analyst at the Asian Banker and was the main researcher on this project. He will present to you the findings of the survey. Next, we will have a presentation by Luke McCormack, who is the Vice President and Managing Director Asia Pacific at Pega. Luke has over 2 decades of experience working for organizations like Accenture, Citi, and now Pega, during which he has been instrumental in helping many banks across the globe streamline their front end of the business, especially the customer service and onboarding sections. During the last 20 to 25 minutes, we will then have a panel discussion with Luke and Chris Kapfer. Chris, as you all know, has been heading the Excellence in Retail Financial Services program at the Asian Banker for over 5 years and has immense experience in having evaluated banks across the region, Asia, Middle East, and now Africa. And I'm sure he will have interesting stories to share with you on what he has seen in the submissions of the last few years. From the registration list that I received, I see that we have a very good audience today, ranging from CEOs, heads of strategy, heads of channels and retail banking from across Asia, Pacific, and Middle East. What this attendance shows is the fact that this topic, which we're just going to discuss today, has become very important in a banker's lexicon today. Right after the crisis, we saw a renewed interest in risk management. That stayed for a couple of years and it's still very important. But in the last few years, the Asian Banker has seen a revival of the retail banker. Some of the largest banks in the region have now reassigned their best men to manage retail banking roles. And what all this means is that we are back to the age where retail banking will drive revenue, drive growth. Chen Hao will talk a lot more about this. And one of the themes that we noticed in our evaluation process during the Excellence Program 2012 and the conference was that customer service and onboarding was becoming more important for a banker, and because of the need for increasing wallet share in an increasingly competitive market. That prompted us to do this research, a research to understand what specific countries and specific banks are doing, how much progress have they made. We heard a lot about good best practices in our conference in Singapore, some very interesting best practice from Middle East, one specific one from Hong Kong, and even from as far as Spain. Based on the interest level that this generated, we decided to commission the survey, as I mentioned, and we then looked for a partner, and we decided to partner with Pega to do this research because of the in-depth experience they have in solving these business issues for banks across the world. And I'm sure in Luke's presentation today, we'll come across some of these case studies, which will give you an understanding of what the best banks out there are doing out there and what you can learn from their successes and mistakes. Now, without further ado, let me hand over the session to Chen Hao. Chen Hao will make his presentation on the survey results of the Asian Bankers survey. Chen Hao?
Yep. Thanks, everyone. Thanks, everyone, for attending. Good afternoon, everyone. My name is Chen Hao, researcher at the Asian Banker. It's my pleasure today to share with you some of our recent survey findings on customer service onboarding. Before I start, next slide. I will quickly give you some background information about this survey project. This survey project was conducted on the back of the Asian Banker Excellence Program. As many of you already know, our Excellence Program evaluated over 160 banks in 30 countries, and we published the research report under our Retail Banking Working Group. Relying on the Excellence Program, during the past few years, we noticed the growing importance of retail business, both in size and profit contribution. We also realized that the future retail banking business is a technology-driven business. The growth will be supported by market demand and as well as more sophisticated banking infrastructure and simple, convenient, and easy banking experience. That's why we have this project. For this particular survey project, we are looking into mature market and emerging market, which will cover Singapore, China, Hong Kong, Taiwan, Malaysia, and Thailand. We ask banks what are their best selling points and what are the key revenue drivers. We're also trying to find out the key technology initiatives in this market, as well as their current progress on process automation. So in the next 10 minutes, I will use 5 slides to share with you some of our interesting findings. I will highlight 1 or 2 markets each slide to give you a better picture. So next slide. So, and my first slide, it shows you how banks think about their strength. Start from the bottom. For mature markets such as Singapore, banks believe their best selling point are their price-making power, user-friendly banking experience, and process efficiency. One good example is account opening process. As all local Singaporean banks streamline their account opening process, best practice in the market has become a common standard. Instant PIN setting for ATM cards, electronic form filling, and 10-minute turnaround are all in place for all players. Differentiating factors are less in the market. Hence, as you will expect, it's surprising, banks are using interest rate and fee to differentiating themselves. Looking up, for emerging market, story is a little bit different. Top-tier players look more into product-driven and geographic growth. Thailand, as an example, focused on innovative product and customer segmentation strategy. However, the attrition of affluent customers is still relatively lower than overseas competitors. In terms of customer service, banks in this market think they're actually excellent in user experience as well as turnaround time. However, we think inconsistency service level and gap to achieve excellent service are still 2 main areas to improve in the future. Moving to the next slide. This slide shows you the areas of key technology initiatives among Asia countries. Let's start with Hong Kong and Singapore. Banks in this market has become very functional, and future IT projects are centered around efficiency, cross-selling, and information gathering. At frontline branch, staff are overloaded to achieve needs-based selling, and equally were expected to navigate through multiple systems and access multiple screens. However, given several IT system breakdown during the past few years in Singapore, banks suffered from massive complaint from the market as well as tightening regulatory supervision from MAS. This is why upcoming initiatives in Singapore still focus on risk and regulation. Among these initiatives, as you can see, banks in emerging markets have focused on fine-tuning their branch proposition and upgrading their infrastructures. They have been consistently working on consolidating front-back office operation, upgrading core banking system. In addition, with the rise of Asian wealthy population, banks shift attention towards advisory asset-based frontline delivery. China, as an example, put considerable infrastructure investment in establishing wealth management center rather than universal branches. Next slide. This slide shows you the level of automated transaction across markets. As you would expect, banks in Singapore, Hong Kong, and Taiwan has reached over 85% for best practice. It is a result of active automation as well as advancing customer group. We believe in mature markets, the impact of e-channels on branch banking has shifted to be interdependent rather than independent. Examples such as Hong Kong, new model of customer interaction was created by integrating the existing branch network with the electronic distribution channels. And they are setting more self-servicing bill payment system, and so on. For developing markets, self-servicing zone was also a hot investing zone. However, most banks' attention are centered around functionality rather than user experience and market adoption. In addition, customers in this market are still need time to learn how to use and trust self-servicing machine and e-channels. This is why markets like Thailand, Malaysia, and China, self-servicing level shows much lower. As the next slide, let's look at the automation from cost perspective. The traditional branch network is expensive to maintain and upgrade. In mature market, motives of promoting onboarding automation usually comes from business growth, such as implementing needs-based cross-selling and managing customer relationship. With high-performance branch and e-channels infrastructure already set in place, we believe additional space for cost reduction in this market is considered small. For emerging markets like Thailand, China, automation or self-servicing Zoom can effectively reduce the number of counter staff, which contribute a large portion of cost portfolio. Without a big physical branch network, smaller banks in this market expect more cost efficient from better customer service automation than those big banks. Okay, next slide. Okay, here comes to my final slide. One thing I want to say here is we will cover all our findings in our final report, which will later on be available online. We will send everyone the download link. And now let me show you a few important trends we found by country. And here today, Singapore banks has become very functional, and they will keep investing in CRM system replatform to further this trend. In Hong Kong, more relationship-concentric branch transformation is underway. This process will improve onboarding customer turnover as well as cross-selling. China is still in the early stage of data warehouse and data analytics. This is why majority retail banks initiatives are focused on core banking and data profiling and system integrating. Taiwan facing over banking market environment, banks are seeking e-enabled channels and product to grow. Malaysian banks adopt customer segmentation strategy. To implement this strategy, banks keep consolidating front back office operation to further support data analytics. In Thailand, banks' automation level remains low. However, they are still seeking ways to strengthen customer service than e-banking or internal process advancing. And now come to the end of my presentation. Thank you very much for your attention. Just send a reminder again. The full report will be available online very soon. After this meeting, we will send everyone the download link. Now I pass the time to our room.
Thank you, Chen Hao. I think there's a lot of information covered there, and as Chen Hao mentioned, we'll send you the report later on. But right now it's time to move the discussion to a little bit more micro level, and I would invite Luke to make his presentation on what he has seen in banks, what are the key impediments that banks face in Asia, and what are the best practice case studies that he's seeing. Luke, over to you.
Thank you. Pegasystems is a company that has spent just about the last 30 years working with the world's leading banks, and as the markets have evolved around the world, and as both retail and commercial banks have evolved their go-to-markets and the way they deal with their customers, we've been at the forefront of a lot of the thinking that has gone on about the way that transformation should take place. And we've been lucky enough with our technology set to be able to support many, many of those initiatives. So what I want to do today is sort of share some of the thinking that we've garnered through working with these banks to see what they believe to be best practice, and it'll sort of tie together a number of the findings that we found that has just been replayed, research that was done, but also some of the things that we're seeing with some of our own discussions that are going on with our client base. So the first thing I wanted to cover, and this might sound like stating the obvious, but the fact of the matter is customers are demanding more. So yeah, we know that they expect needs to be met pretty much immediately. We expect that banks understand them and understand contextually why they would be interacting, and they also expect immediacy. So the emergence of new channels has created a whole set of new challenges for organisations and consumers as they engage together. I'll talk a little bit about that in a second, but the reality is that consumers expect a consistent experience regardless of channel, because in their eyes they're dealing with the same organisation. Unfortunately, many organisations aren't deemed to be the same organisation when it comes to channel, and you can get a very significantly different service experience as a result of which channel that you're choosing to use. But customers are demanding that those silos are broken down. In addition to that, as a consumer expects service from an organisation, they're not interested in the various silos and empires that might exist within an organisation, which have traditionally been built on product lines. Again, as a consumer, they expect that their portfolio of products are defined by them, not the product sets that they belong to. So consumers are expecting that, you know, there is no such thing as internal silos within retail banking organisations, and as a result they expect consistent service regardless of the product or the context in which they're operating. And then finally, they're expecting things to be done faster and better all the time. And these innovations, and this is not a bad thing, but it is really challenging some of the legacy systems and processes that retail banks have built up over many, many years. So with that sort of context, you know, what we do know is that many of the technologies and processes and procedures that allow a bank to go to market are really constraints and impediments to the demands that consumers are placing on them. So the next slide is a real example of one of our clients. Now, it may not come through very well via the WebEx, but I think you can get a very clear impression of this is from a contact centre representative, their desktop, and the number of applications that they needed to use to support a service transaction for a customer. Now, not only are there many, many windows of different technologies, old green screen solutions, chat, file servers, etc., but I'm sure you can also picture on the desktop, on the desk of the CSR are a number of manuals, a number of pieces of collateral that allow them to be effective. And this is not unusual. I think that most organisations have elements of this in varying degrees. And at the end of the day, not only is that the operational environment, but typically, you know, there's a history of either failed projects or channel inconsistency where things are done differently on different technologies. They're putting a lot of pressure on the customer-facing staff or the agility of the technology facing the consumer. And at the end of the day, not only is it extremely hard to manage and control, but it's also extremely expensive. So I'm sure that this paradigm does not come as a significant surprise, but and as I say, different organisations have varying of depth as to these problems. So when we think about multi-channel, and that was just an example of one channel in a contact centre, but when we think about multi-channel, we absolutely believe that it is the fusion of sales and service. It is not enough just to be trying to consistently sell in the wrong context when someone's come in to engage with your organisation for a service transaction, but they do need to be seamlessly integrated. So in that context, it's really important that the customer experience is the primary consideration in the way in which the bank executes either sales or service. So what we're seeing is a lot of effort being put into the considerations of customer experience. You know, the innovative organisations that we work with are happy to invest in customer experience labs. They do a lot of voice of the customer, and they really take the time to understand what is a premium customer experience. To that end, and you know, thankfully we're able to support that through our technology, but also it's important that the view is strategic, because it is also very easy, and I think, you know, when I look at you know, the last, say, 10 years as different organisations have evolved in the way they do things, they've really gone to pain points and put in point solutions as opposed to having a strategic view and a roadmap as to where they're headed. So when we talk about a unifying vision, we're really talking about making sure that there's consistency across channel. to make sure that the experience for the consumer is the same, regardless of whether they are interacting via an online environment, whether they're in a walk-in kiosk or branch-facing staff. So it is important to have the strategic hat on and understand what that means in the context of all channels. But then from a delivery standpoint, we all know that it's important to not try and boil the ocean and undertake massive transformation projects that are going to touch and change everything at once. Ultimately, things need to be done in a more tactical approach, but with probably the most overused term in business today, with agility. But the reality is agility is absolutely key, because the market can move so quickly. Organisations need to be able to respond during the development process of a new transformational program. So the balancing act that we see and the aspirations of the leading organisations we work with is balancing personalised service, being absolutely contextual to the consumer in question, but being able to deliver that with production line efficiency, making sure that the economies of scale that can be driven through both technology and operational excellence can drive margins lower but not compromising on the service provided. And it is a balancing act. And we are really excited by some of the programs that we're able to be engaged in. And again, I'll talk about a few of the case studies towards the end of my presentation. But that's the sort of paradigm that we have seen emerge. And one cannot compromise the other. They need to coexist. So when we think about that, and you think about the fact that you have your consumers, your customers that can access your organisation through multi-channels, and they may not even be accessing your products through your organisation. They could be through intermediaries or brokers. At the end of the day, you're still wanting to ensure that the delivery of product and the experience of the customer is consistent. So when we think about, next slide, as we think about how we choose to deliver that, I mentioned before that sales and service need to be intertwined in the way that the customer engages with the organisation. And provision of a multi-channel sales and servicing backbone is what Pegasystems do. It is our meat and potatoes in terms of what we allow our clients to lay down, and then using things like case management and control to ensure they've got full visibility of what's going on, the fact that they've got predictive and adaptive analytics to understand absolutely the intimacy required in the customer experience, and operational efficiency in particular areas of pain, whether it be a service transaction like a complaint, whether it be something as simple as a change of address, making sure that those service transactions have a sales context but are absolutely consistent regardless of channel. And these are the sorts of these are the things that we allow or we provide to our client base, and what we're seeing are absolutely being drawn into, because organisations are trying to strike that balance between that personalised service and production line efficiency. So the next slide is really sort of makes a few statements that I'm sure that are going to resonate. It sort of goes, you could say these are motherhood statements, and everyone knows this, but the reality is they don't change. The fact of the matter is a great customer experience allows organisations to reduce operational costs, and consistency against channels also ensures there's no channel conflict, and from an efficiency standpoint, outcomes are reached sooner and cheaper. It also means that the relationship that is struck with the customer is going to be of higher value, both for the customer, but also for the wallet share that an organisation can derive. And then finally, in terms of growth of business, it allows organisations to attract new customers. We are seeing this consistently driven out of all research that we're engaged in or that's performed in the market. And again, I'm sure you'll see that in the material that the Asian Bank have done as part of this exercise. So let me talk about a few case studies, which I'm sure will be of interest. First one I want to talk about is Deutsche Bank, a global organisation that we work with who have deployed our technology to ensure that they are delivering offers and next best offers to their customers regardless of channel. So really making sure that they've got absolute consistency in the way that those offers are driven to their customers, but in a way that is done with customer intimacy in mind and context in mind, not just as a result of needs-based Q&A. So really digging into the available goldmine of information in the organisation, whether it be the customer transactions, the customer behaviour over time, and also the context of why they're interacting with the organisation at that time in real time, delivering absolutely tailored offerings to those consumers and making sure that it's not just the way they would get it if they're interacting on the web, but making sure they would be provided with the same offer regardless of channel. I think the statement at the bottom is really important. The effectiveness, there's plenty of research and data points to support the fact that outbound marketing is not as effective or is decreasing in its effectiveness. But inbound marketing, when the customer has made the effort to contact you, is an absolutely perfect opportunity to not only service their needs, but also determine if there's an opportunity to offer them something new and grow the business. And that's what Deutsche Bank have done. Just moving on to talk about something a bit closer to home, OCBC have deployed our technology to underpin their entire client onboarding approach. And there's some fantastic sound bites that OCBC have used to describe the fact that account opening really is a moment of truth in the life cycle of a customer, and at the end of the day will define, in some respect, the relationship that you have with that customer over the journey. They were very focused on providing a entirely transparent process with high levels of automation, where the customer is actually feeling like they're participating in the process as opposed to being asked to fill out forms or respond to question and answer. It's been an absolute success story, and we're collectively very proud of what their onboarding program has been able to deliver. The economics of the program speak for themselves, and what it has allowed them to do is change the way and the rhythm of discussions that they have with their client base right from inception. And again, I think the statement at the bottom from Anthony Johnson really helps sort of gel the mindset of OCBC as they undertook this program. And then finally, the Royal Bank of Canada, another large North American organisation who have deployed our technology as a servicing backbone across the entire organisation, and it is pervasive to the extent that any service transaction that comes into the organisation is dealt with in a consistent manner. So really trying to make sure that there is absolute visibility of service cases coming into the organisation, absolute tracking of those to ensure that they were done in a timely fashion, and most importantly, that they were dealt with through to resolution. So it wasn't just a issue capture solution and backbone, but an issue resolution solution. So the three case studies that I've just referenced really go to, with Deutsche Bank talking very much about driving sales through those inbound service transactions. OCBC really redefining the way to commence a relationship with a customer and absolutely hitting on that moment of truth. And then finally, Royal Bank of Canada, who are driving an absolute service vision through the use of a backbone. So again, we've got many case studies with both local Asian organisations that we work with, and also many of the multinational wholesale and retail banks. But hopefully I've shared with you a bit of the thinking that we are seeing and why it's important and why at Pega we're lucky enough to help out with some of those clients as they continue on that journey.
Sorry. Thank you, Luke. Thank you for the presentation. The next, as I mentioned, so we'll now go into a panel discussion, both Luke and Chris. Chris, can you hear me? I just want to make sure you're there.
Yeah.
Yeah, perfect. Thanks, Chris. So, first question, I think, Chris, of course, to bring you into the discussion, in terms of the reviews that you've done across 30 odd countries in the last couple of years, what are you seeing as the key trend in customer service and onboarding, and what specific mentions do you think deserve a mention? Banks do you think deserve a mention here?
I think you probably need to keep into context also the post retail banking in Asia. We have seen a lot of regulatory changes coming through that have reduced and are, I think, threatening to reduce further a substantial portion of fee income from retail banking activities. And that is actually compounded by a very low, net interest, interest rate environment, which is depressing the margins, especially of the larger banks, on their conventional products. So, and I believe that is the reason why probably consumer finance is not really at the moment the darling of driving the bottom line. At least what we have seen is more wealth management and credit cards, and so the banks are really pressuring on really getting their bottom line right, and looking at the share of wallet, as Luke has been saying, and it's not that easy. And I think in the last 2-3 years, we have seen many banks going back and reviewing their portfolios. Not only reviewing their portfolios in terms of the product suite, but also in terms of which customers we are dealing with. Luke, you were mentioning that, who is our customer. I think that's very important, particularly when you come to channels and new channels like mobile. I've just come out from a discussion with a Korean bank, and this bank was not able to determine the purchase or transaction behavior of their mobile banking customers, despite having actually a mobile wallet already. So this shows, pretty much that there's still a lot of work to be done, and I think banks have really gone back and did a lot of and we're researching what our customers are. And we have seen, I think, last year again, banks coming back with more exciting initiatives after this 2 to 3 year, going inward period. And I think Luke's, case studies, they bring it together, right? I mean, you have the account opening, which is still a very relevant issue. You have the data analytics aspect of it, which is, I think, has started about 2 years ago to, become a buzzword. But the issue is also a lot about then what is data analytics, and to be honest, many players are, seeing it as an extension of CRM. So the back office infrastructure for the things we to gun it, like multi-channel integration, account opening, I think that's where the banks are working very hard at the moment. And we have seen a lot of good initiatives coming through. Luke mentioned one. I think in terms of the channel side, the focus or the talk about multi-channel experience has been very strong pre-crisis. I mean, the industry goes through certain cycles of themes, and customer multi-channel integration was actually a theme pre-crisis, and then it suddenly fizzled out. Not saying that the banks have not continued working on that at the back office. I think they did a lot of work on that, but it wasn't any longer so much in the last years the darling of discussion. It was rather data analytics. In fact, when you're asking me about what are the banks are focusing on, it's internet banking, mobile banking as a not separate channel. I think they would like to bring together the e-banking environment in a holistic, on a common platform where you have everything in your investment account, your checking account, and you have common passwords, you have common application standards. So banks have worked a lot, and that was the key focus in the last 2 years.
Yeah, so
on mobile
Chris,
banking.
Sorry, Chris, just want to bring in one of the key themes that I think the last time we were discussing, you had mentioned that we have seen was banks have started giving out a lot of service pledges, and that is an indicator of probably a consistent experience happening across the industry. How do you see that again playing into the whole concept of what Luke mentioned, being a consistent experience for customers across channels?
First of all, I mean, the service an aspect of differentiation, right? We guarantee to you a certain level of service, and if we don't meet them, there will be consequences. So it disciplines the bank internally. We found very helpful. It also gives a more predictable environment to customers, what they can expect from banks. I think that is something we also have been looking into the excellence evaluation program for many years, whether there's a published service charter, banks are, sort of issuing or sort of explaining to their customers. Yeah.
One interesting aspect of that is when you think about those service charters, the ability to meet them is absolutely going to rely on visibility and understanding of what we've just committed to. And my experience has been that's been a real challenge for a lot of banks that have been happy to sign up, but they're not necessarily have a complete understanding of what they're signing up to. And that can obviously have a counterproductive outcome when that service charter may not be met. I think that obviously the demand, the competition in most markets has driven the fact that service needs to be a differentiator. But it's really important that organisations are able to walk the walk and be able to have that visibility of where service provision is being executed and making sure that they're sitting within the commitments that they're giving through these service charters.
Yeah, absolutely. I mean, I agree with you in the sense that you have your processes in place once you issue a service charter, where you are, so I think Standard Chartered has been doing this a lot. I mean, they rolled this out regionally, Standard Chartered Bank in Asia, and to keep down the operational cost and to face less consequences, you better get that right. So it needs a lot of actually back office work. That's true. But I think it's a development which we see coming through very strongly. The international banks have started that, and soon local banks will do this. By the way, the same was when the global account overview for the international banks. That's already coming through now on the local banks, where they have a consolidated account when you have cross-country accounts at the customer. So that is already trickling through among local banks now.
Yeah. Okay. Thanks. I think, Luke, one of the things that you mentioned in your presentation was that the fact that there's so many channels out there and banks need to manage all of them also means that there's a lot of problems that customers face on a day-to-day basis as to what they really want. Which bank or are banks actually thinking of that as a process, which means they're more customer-centric, or how is their strategy evolving to keep the customer at the center while ensuring that they solve this problem?
So there's a lot of tension, right, between the way a bank has been traditionally organised, which is traditionally around lines of business and sometimes very siloed, to achieve customer centricity, because a customer does not have any concept of silo, right? I have a mortgage, I have a credit card, I have a term deposit, I have a checking account. That defines my relationship with you as a bank. I'm not particularly interested in the legacies or silos that you may well have. New channels as they've emerged, and there's a real challenge for organisations as they may want to. They don't want to be a late adopter. They want to make sure that they're seen as an early adopter, but sometimes consumers aren't quite sure what a channel might represent. and how they may want to use it. So behaviours can change in the blink of an eye, and to service some of these channels are very costly, whether it be technology, whether it be just your go-to-market, and we all know that there'll be always marketing campaigns and a lot of business development dollars spent on ensuring that the penetration exists. So the challenge of being an early adopter, but also trying to predict how this may play out, is a real challenge for organisations, and their ability to be agile, and that's why we talked about, execute tactically and retain agility in the way you're executing, but do not lose sight of the ultimate service vision that you're trying to drive at a strategic level. So, I use the term balancing act in a different context, but this is another balancing act. And again, it's because there's a level of unpredictability in the way consumers may react to particular channels, and especially when they're emerging and not mature. So, unfortunately, banks are left with a real challenge of, well, do we wait and see? Waiting and seeing may well just open up the ground for your competition. So there is a lot of balancing act that needs to be undertaken. And again, traditional technologies will not necessarily support it. Our brand promise is build for change, and that's what we believe we allow our clients to be able to do. And we're seeing them being able to be agile in the way that they address some of these market challenges.
Yeah, okay. I think that can be the next part.
I mean, can I just, yeah, look, I mean, you mentioned the changing the customer address, right? That is a concrete action a lot of people want to do because they change housing or change countries. 8 out of 10 banks today are not allowing changing the customer address online. You have to download a form and fill in a lot of data, including the signature, which doesn't often any longer match the original one when you sign up on the account, and it goes back and forth. And there are a few banks only you can do this entirely online, right? So this is a concrete thing where customers are completely driven crazy when they do.
But why? Again, 8 or 10 seems like is that just something to do with regulation, or is it just internal processes that never have been revised?
Well, there are, I mean, that is not only, by the way, consistent across a single bank. We know a single bank, a large international single bank, which in Singapore, you cannot change your customer address online, whereas in other countries you can do, right? So I think there's a lot of small, tiny initiatives which still need to be done. I think one of the good banks which have thought about that a lot was OCBC in Singapore. How can we allow customers to update information on the go, while not going back to the customer? So they did this over the ATM, and a lot of banks have followed with that. But still, on the internet, you can't just not do it with every bank. So that's just one small anecdote.
Yeah, Chris. So in the mix of all the multi-channel discussions, let's add social media to the mix. So we all know banks have tried a lot. What are you seeing as banks trying? Are they doing enough, or is there a long way to go?
Social media has become an extension of the conventional marketing practices banks are doing at the moment. There was a lot of expectations in the beginning, and everybody went Facebook. But then banks realized suddenly how to control information. There were a lot of failed attempts by the Australian banks how to, control their own clients, what to say to other customers, because other customers came, telling what this and that bank is doing. There were internal policies which were, getting back and forth. I think the banks were just in the beginning ready to, how communication will take part. Now we are 2 to 3 years in that making of social media, and all what we see is actually conventional marketing pushing complaint resolution, and that's it. We see very little where social media are actually used as products to create services, to build actually that platform into the product development or service development process.
Yeah, Luke, what do you have?
I think it's also complicated by the fact that I think consumers are not necessarily sure on, in mass, how they want to engage with organisations through new emerging channels. It's exciting for the first time to create a link between yourself as a consumer and another organisation via a social media channel, but is that necessarily going to drive your ongoing behaviours? And if a consumer is not quite sure about what might be offered as a result of a new channel emerging, it's going to be very difficult for a bank to reciprocate, and not just reciprocate to be there, but then also potentially turn that into a growth initiative. You know, it's one thing to be able to respond and react to Twitter feeds, for instance, but how do you actually change that so that it's not just reactive and after the event, but turn it into an opportunity? And I think because it's a moving target from a consumer standpoint, it's hard for banks to take aim and determine how they may want to address some of the opportunities that new channels throw up. So it's an interesting and you know, I think we would all prefer to have it than not have it. Yeah. But is it going to replace traditional banking methods? I'm not sure. I probably wouldn't say so in the next 5 years, but I think it will absolutely complement and become intertwined. I think, though, that the market is still trying to work out what that looks like.
So in implementing a multi-channel strategy, as you mentioned, like overall umbrella multi-channel strategy, and then going deeper, which improves processes and then technology at the global level, what do you think are the key challenges banks are facing today? What's the key roadblock?
One of the big problems that we see is that organisations look to ring-fence a particular set of processes and technology to address a particular channel, as opposed to saying we want a true multi-channel approach. So regardless of the stimuli or the channel that a stimuli has come through, we want to make sure that we do it in a consistent fashion. And part of that is the very sort of gung-ho tactical approach that can be taken sometimes to meet the market and be an early adopter. So just getting a Facebook page up, but then not really having anything underneath it, and not having it intertwined into the broader context of the organisation, can create little empires of capability across the organisation. And what that tends to drive is a diffusion of that consistency that you want to be able to provide your customers. Some of that's driven by technology, some of it's driven by just the who owns it. You know, and again, we're seeing more and more that most organisations are product and distribution distinctly starting to fall into their areas of responsibility, and the organisations that we work with that we see succeed are the ones that have ensured that product and distribution are two things that work together, and there's no level of dominance in certain scenarios. I'll be interested in Chris's thoughts on that, because that tension can really drive poor customer outcomes, or it can absolutely drive supreme customer outcomes.
So as I mentioned, so these customer service pledges, etc., are a clear way to increase wallet share with the customer. And one of the things that has come out as a key trend has been things like mobile wallet, mobile banking, mobile commerce, etc. So Chris, I want to ask you about what have you seen from the context of how banks are managing mobile as a new channel, which I'm sure, again, like social media, is about evolving. Yes, it's evolving at a much rapid pace, and there are new products coming out every day. But how are banks merging that within their strategy, and what best practices have you seen out there for that?
I mean, digital wallets, M-wallets, mobile payments, I think there must be competitive these touch points in order to be able to take a meaningful share out of those transactions. And I think ultimately the banks which better are able to understand the digital purchase and transaction behavior of customers, and subsequently actually design product applications around it, they will win the game. You know, and I mean, what we have seen is a couple of banks just started that. We have seen this in Korea with Hana Bank last year and Shinhan, where you have, you know, person-to-person actually fund transfer on your, or where you can send from your smartphone, you know, a sort of code to your son or daughter, and the son will go to the ATM, type in the number, and will get the cash. So these kind of things are, you know, where banks are playing around with at the moment. But of course, I mean, it's like ATM in the 70s. You know, it will take a few years to. There are segments. There are segments which are very receptive to these kind of things, banking on the go. And I think the long trend is really that people demand really instant services, instant gratification of, when I communicate with banks, and that's what the transformation of e-banking is going into, from a simple, representational site into a meaningful two-way conversation on the smartphone. So, but that depends on the service infrastructure and the infrastructure of the country then itself. But it's really starting already. We can see this coming also in Australia. Luke, you were mentioning the Kaching ones from CBA, which is really going on the micropayments over the smartphone. These are quite interesting initiatives. Key is here basically, can you offer relevant payments which people believe or think they want to pay for that, or they're willing to pay for a relevant service a bank is offering. I think that we haven't seen a bank cracking yet. So they're just introducing it for free a bit, and then banks can really derive meaningful actually fee income from these kind of applications.
Absolutely. At what point do they actually start changing consumer behaviours, and those behaviours then have a premium associated with them? So it's part of this balancing act. You need to be innovating, but that innovation also needs to be able to, at some point, drive positive outcomes to the business. Otherwise, there are plenty of examples of gimmicks that have not ultimately delivered on the promise of what they started out to offer.
At this point, I just want to drop one more information from the survey report that Chin Hao mentioned earlier. So we have documented best practices, and some of the best practices in the account opening process, for example, we've seen is that in Singapore and Hong Kong, the average time for an account opening takes about 10 minutes, whereas in markets like Malaysia and Thailand, it's roughly around 25 to 30 minutes. That's one of the things. In terms of number of document types that are required by markets, Singapore leads the way with one document or two at max, and markets like China and Malaysia, once again, are lagging at 2 to 4, including Thailand. Again, one of the key projects that we've seen in our survey, which almost all banks across the region are trying to do, is trying to bring in application forms that are universal across their products, which then means also that the number of account fields in an account opening form goes up or down depending on how the streamlined process works. And once again, banks in Hong Kong this time around are leading the way with fields which are very less than around 10 to 15, whereas China and Thailand once again have large forms, which again increase the turnaround time for processes. So the trends which have been reflected very well in the report will show you that there is a dramatic change in what's happening between markets, and mature markets are of course leading the way. And as Chris mentioned, compressing margins and increasing competition being the key reasons here. So I think these are things I just wanted to add at the end. Luke, if you have any comments on that, what was your key takeaway or surprising result from the survey?
I think the biggest surprise for me was the variation across markets, and some of it you would easily associate with maturity, but price, service, you look at that and dramatic variations market to market. I'd like to think over time as some of the emerging markets become more mature, you'll see that those oscillations reduce. But I think, again, what will be interesting to see how that evolves over time. But I always really found that very, very interesting. And again, depends at what rhythm a market may be operating really determines what the go-to-market might look like, and obviously that's what was being flushed out through these questions.
Yeah. So Chris, from your point of view, in terms of emerging markets, we actually talked a lot about case studies from mature markets. In terms of emerging markets, what do you expect from which of the markets to be the leaders in the next couple of years in terms of customer service onboarding? Which market and which specific areas are you expecting? Are you looking out for? Are you rooting for in terms of doing a sea change in how they service customers?
Emerging markets have that the margins are still higher. Growth is still fairly growing. I mean, Indonesia, you have a growth on the consumer, retail banking side of about 20%. and fairly similar in Thailand and elsewhere. So as long as you have it, you just need to be out there. You just need to have your coverage of distribution channels. You need to have the convenience and the accessibility, and you will add to the bottom line. I think customer service experience seriously being debated, discussed, and implemented comes when you are, when you're approaching margins where channels and products are a given, and the customer looks for the next thing. But said this, we see that in quite a few emerging markets, banks are subsegmenting better their customer pool. Onboarding in middle markets like Malaysia and Thailand, we have seen this very strongly, especially the account opening process, where you don't want to have just the speed of the processing, but also you want to leave enough time for a needs-based selling, which is balancing again these out is quite a challenge. So as the market is growing strongly, banks are letting clients do that.
Yeah. Okay. I think one last question I want to run by both of you. What do you think is the next big thing in customer service and onboarding?
Good question. I believe that the next big thing and a very tough nut to crack for a lot of organisations is going to be being able to execute service and onboarding transactions cross-channel through the life of the service transaction. So, for example, just to use an example, the interaction may commence via the call centre, may require some work to be done by the consumer in an online channel, via the internet banking site, and then may conclude via Facebook. That is a tough nut to crack for a number of reasons for most organisations. But as a consumer, that would seem simple, right? It would seem natural to be able to interact with the organisation at my choice, as opposed to be driven into a particular channel. Could you please come into the branch next week to sign some documents? So to me, organisations that are able to bridge those gaps and ensure that they provide true multi-channel experience, I think are going to redefine the way that consumers view them. And there's no question one of the outcomes is going to be growth.
Yeah. Okay. All right. I think that ends our discussion for the day. Let me just quickly conclude in terms of what we've listened to from both our panelists and their presentation earlier. So we've seen that there's a need for, of course, we all know that there's a need for consistent service across channels, and the increasing number of channels that banks are having to work with means that both the banks and the customers are learning their way. The banks need to guide their customers along while channels are improving, which means that they need to look beyond silos, which is something that customers would not understand. At the same time, what the Asian Bankers Survey, which, as I said, will be sent to you, shows us that in mature markets, as margins are compressing and competition is increasing, banks are looking to invest in more technology, which will guide their wallet share and improve their processes. And whereas each bank, each country has its own USP, it's targeting to figure out what the USP is. For example, which is what the surprising results were, is the fact that banks in each country have a different USP, and they're targeting to focus on these areas to drive differentiation. Differentiation in the future will form a key component of a service pledge that any bank comes up with. And I think that will drive future growth. I think, as I said, the rest of the stuff will be shared with all of you. As a part of an email that will be sent out, it will have the recording of the session along with the full report. Please look out for that email. If not, if we forget you, or if you want to forward it to somebody else, do write into us, any of us, and we'll get back to you. Thank you, Chris. Thank you, Luke, for your time today. Thank you, Chenao, for your presentation. And I look forward to seeing you again on our next Asian Banker Daily Consultation. Thank you, everybody. Thanks once again.